you all so much for joining us at our second annual Punchbowl News HQ during CBC ALC. We are thrilled to be here once again. My name is Anna Palmer. I'm the CEO and one of the founders of Punchbowl News. Please, I know there's a lot of people in the back. You can come fill in some of the spots for the conversation. Welcome you to do that. We are partnering with Chime today as we focus on financial access and digital banking in our editorial conversations. We also want the HQ to be a fun place. There's food, there's beverages, there's charging stations, there's lots of spots to sit down. I know that CBC Week is a marathon, so we appreciate you joining us today. For those of you who are new to Punchbowl News, we are a 3.5-year-old media startup. We focus on power, people, and politics in Washington, D.C. A shout out to some of our premium subscribers from day one who are here with us. This conversation around financial access and digital banking is particularly important for us. In the past year, we launched The Vault, which is our premium policy vertical that really focuses on policy around financial services. So this morning, I'm going to welcome Brendan Peterson in a few minutes, who co-anchors our Vault coverage. He is going to moderate the conversation with Mr. Meeks, the Democrat from New York, talking about all things financial inclusion and digital banking. Afterwards, I'm going to be joined by Chime General Counsel Adam Frankel for a fireside chat. Later this afternoon, we have Alvina Nawaguna, Special Projects Editor at Punchbowl News, who's going to moderate a really interesting panel on the future of fintech, but specifically looking at what's happening at that state level. Rachel Schindler, Vice President of Product and a Punchbowl News co-founder, is going to also moderate an ambassadors roundtable, and we will kick off or close the day with a toast. So first, I want to welcome Jeff Stoltzfus, Vice President of Government and Public Affairs at Chime, for some opening remarks. Jeff.
Thank you, Anna. It's great to be here, and you pronounce my last name very well, which is not easy. So yes, my name is Jeff Stoltzfus. I lead Government and Public Affairs at Chime. We're thrilled to be hosting. We participated last year. Chime is relatively new to DC, not quite as long as Punchbowl, but hopefully on a similar trajectory. So it's great to be here. We circle this week. We put a lot of effort into this week. It's fun, but it's also impactful and important. And the work here, the policy discussions, are very meaningful and relevant to Chime's work and to us all. So we're honored to be part of the event. A little bit about Chime. As you may know, Chime is a mission-driven company. So our mission is to unite everyday people to unlock their financial progress. A little bit about what that means. It has a lot to do with basic access to banking. So access to the banking system. Traditionally, banks don't do as well as maybe they could or should. We're here to solve and contribute to that solution. Our basic banking products and services are easy and free. So we're quite pleased to have sort of innovated in that way, and that includes not charging overdraft, monthly service fees, minimum balance requirements, et cetera. What we like to say is we aim to profit with our members, not from them. Expanding financial access is central to our mission, as I just covered. It drives us to do better, to be better, to create better products, and it's why we're thrilled to sponsor an event and a focus on fintech and access. Deepest appreciation to Anna, to Punchbowl, the team, Congressman Meeks, thank you for being here. Attorney General Ford, Nicole Elam, Yasmin Salina. Our General Counsel probably traveled the furthest, slightly further than AG Ford, so thank you, Adam, for coming out to DC to be with us. So with that, I'll hand it back to Anna, and thank you all.
All right. Well, thank you so much, Jeff, for kicking us off this morning. I am now going to hand it over into the very good hands of Brendan Peterson to kick us off this morning with a conversation with Mr. Meeks. Sir.
Hey, everybody. Thanks for being here. I am Brendan Peterson. I cover financial services and the economy for Punchbowl News. And I am thrilled to invite Greg Meeks, Representative Greg Meeks, onto the stage. We're going to talk about financial inclusion and banking. Please, sir, give him a hand. Congressman Meeks is serving his 13th term as a member of the House of Representatives, and he has been talking about economics since the very beginning of his career. I went back into the New York Times archive, 1998, when you were elected. You gave the Times a quote that I'm going to read here. You said to the New York Times, for the black community, quote, "The key is now economic. We have to move toward the economic redistribution of our community more than we have in the past. That's what I'm about." How are we doing?
We've made improvements, but we've still got a long way to go.
Okay.
And I think that where we're at this juncture right now is, and not to start off being political, we got to go forward. We can't go back. And we see with some of the things that are taking place, whether it's in the courts and others, they would like to begin to take us back to where we were. But there's been successes. When I look at overall the number of individuals who have created wealth, it's important. But we've made and lost some ground, some during the financial crisis of 2008, some, during the pandemic, and so therefore we cannot have the policies that prevent us from getting back to where we should be, and where we were at one particular time, and focus on how we continue to move ahead. And we can only do that with vision and for a better tomorrow going forward, and understanding what we have before us. But the key still is, I tell everyone, the second phase of the civil rights movement is indeed economics. And so, although today they're trying to take some of the voting rights back, et cetera, but we've got to make sure that we increase and enhance every opportunity to create wealth and close the wealth gap. That's still a challenge for us throughout.
And we're going to talk more about that in a second, but I can't let you off the hook without some news of the day questions. Let's talk about shutdown. We've written a lot about Speaker Mike Johnson's CR, Save Act strategy in the last week or so. Johnson pulled a vote on this yesterday. How confident are you at this point that we're going to avoid a shutdown this month?
And you never know with the MAGA Republicans, to be quite honest with you. You have, and we've seen, and we've been there already, where it's a situation where the government would have shut down previously. So it depends upon whether Johnson decides that he's going to let the whole of Congress participate. If there's a vote where we, and we compromise and we work together, and we'll have a vote on the floor, or whether the extreme MAGA part of his individuals decide to take control and say, don't put anything on the floor, don't negotiate with Democrats at all, don't do this, then we don't know, So really, and it's shameful, because what we thought that we did when we passed the previous CR was set the limits and the goals as far as spending is concerned, something that we had worked hard to agree upon, and so we thought that basis would continue and take us through. And so all we have to do is to continue the commitments that were made previously, and it wouldn't be a problem. But the Speaker would have to put that bill with the same numbers on the floor and let us vote for it.
Mm-hmm. Let's talk about New York Democrats in 2024. The party underperformed in 2022. I'm curious what you are seeing New York Democrats do differently this year as we head into 2024. Is New York in a position where it could hand Hakeem Jeffries the Speaker's gavel?
Absolutely, and we're going to do it. No question about it. We are in a hugely different position in New York right now. Number one, the first thing that we did in New York, we won back New York 3. Got rid of Santos and brought Tom Suozzi back in, and we're going to keep that seat, and we're going to hold on to that seat. So remember, then The problem in 2022 was, quite frankly, we took some things for granted. Seats that we had, we didn't think that they were really in jeopardy. And then you also had, it was a redistricting year, the first year for some folks to have new seats, new districts in regards. And then you had some retirements. Kathleen Rice, for example, she was gone, and so there was a new race there. So all of those uncertainties was taking place. A new governor who was running for the first time for their election after. So the whole situation was somewhat unstable in New York. It is now much more stable. And not only that, people are focused on it. We know what these lines are. So we're going to hold on to New York 3. Pat Ryan is going to hold on to New York 18. And then we're going to pick back seats. We're going to take a seat that had been Republican for a while in Syracuse, New York 22. And John Mannion is going to win that seat. That's one of the seats we're going to pick up. And then we're going to go down and we're going to go to Long Island. And we're going to pick up New York 4. That's a seat that, and one part of that in that deal was, part of that was my district at one time before redistricting. And there was an extremely low turnout. People did not come out to vote. That's not going to be the case in 2024. A, because we're focused on it. B, I think that the Vice President, Kamala Harris, her running is going to help make their turnout. I know I'm working the district. And the communication between the governor, the state party, Hakeem Jeffries makes a difference. So we'll win New York 4. We'll win New York 19. That's, somewhat upstate in that area there. That's Josh Riley. So we'll win that. So those are 3 seats. And then I think that we'll also win New York 17 with the return of Mondale Jones. He goes there. And so depending upon the turnout, then I'm going to say something that I think that folks don't know. There could be an upset, where where you shock the world. New York won on Long Island. John Avallone, former host of CNN, is the perfect candidate to run. And that seat is closer than it's been. The last time a Democrat was in that seat was Ted Bishop. But there's just some developments that are happening out there in the Hamptons that looks like that seat becomes competitive. So you just take those seats alone. And then another New Yorker, some of you may have heard of him. His name is Hakeem Jeffries. He'll become the Speaker of the United States House of Representatives.
All right, you heard it here first. I'm going to sneak in one international news question here. You are the top Democrat on the House Foreign Affairs Committee, and on Tuesday, Israeli airstrikes hit a part of the Gaza Strip designated as a humanitarian zone by Israel. Now, back in May, you did put a hold on weapons sales briefly to Israel before you lifted that hold. Is that a tactic that you'd reconsider given this week's news or further bombings in these safe zones?
So what I think that's the problem, we still have a hold on the 2,000-pound bombs because that is not something that should be utilized in that type of warfare. And the number of innocent lives that you have. In fact, even when you talk about the number, the greatest number was taking place when you saw buildings just collapsing by the utilization of those 2,000-pound bombs. And so the president and the administration still have not lifted that ban. And there should be an additional type of warfare that's taking place. And there's been some shifting where you can try to target it. But what has to happen is there has to be a ceasefire. That's the bottom line. There must be a ceasefire. And I think that President Biden, and you hear the Vice President and Secretary Blinken and National Security Advisor Jake Sullivan are all saying that the way that Prime Minister Netanyahu is prosecuting this and moving forward has to change. And we have to work to make sure that we reach and get a ceasefire so that humanitarian aid can come. And I also think what is significantly important to do, and starting to have that conversation, I know we are on the Foreign Affairs Committee, and I'm having it with a number of my Democratic members, I'd love to do this in a bipartisan way, is talking with others in the region, Saudi Arabia, UAE, Qatar, Egypt, Jordan. They all to play a role, and they're ready to play a role because Hamas is a threat to them also, so that we can get a peace deal. A lot of folks in Israel are in the streets against Mr. Netanyahu because it seems as though he has not been willing to change the way that he's prosecuting this war and not have, gotten the hostages home, which we need to do. So I think that if we start talking about and bringing that up, because one of the things that I think fundamentally has changed is the region itself, where you've got Gulf countries for the first time are saying that they want normalization with Israel. Israel has the right to exist. And that's what is tremendously important when you say, well, Israel doesn't have the right to exist, then you're saying you don't want peace. But now you have folks that had never said that Israel has the right to exist are now saying it. And so you can work collectively together to try to make sure that we can bring some peace in the Middle East.
Okay. I want to segue now into financial services. And let's keep it a little news of the day with the Federal Reserve, which we're expecting to cut rates next week. Do you have a preference on the size of the cut? It seems like folks who are more worried about the economy right now want a bigger cut to get that growth back up faster. And if we are headed for a recession, I don't have to tell the people in this room that Black America usually feels it first and the hardest. How are you feeling about it?
Well, look, there's a reason why I think that the Fed is independent, and it should be, so that we don't play politics with it. We want the best fiscal information, because sometimes you do certain things for a short-term gain, and you have long-term pain as a result. And so we don't want to play that game. I don't want to play that game. I want to make sure, if we think that where we are right now, and I know people are not feeling that the economy is strong and have recovered. They're not feeling it. But when you look at it, and as you talked about me in foreign affairs, I've traveled around the world. The American economy is stronger than most economies, almost any, around the world. We've recovered more from the pandemic. People have forgotten about what started this problem when the other guy was still president, and we weren't doing this. We're losing jobs. Things went up because, when we were talking about trying to open ports and things of that nature, all shut down, and so that's when costs went up. We have now, reduced inflation and moving things down. So, long way to answer. The question is, I want the Fed to do what it said. People had said we would be in recession. Didn't happen. I mean, there was all kinds of talks before of terror, worse than the scenario is. It seems to me, and when you're working and living through something, it seems worse until you look back at where you came from and then where you're going. And so I think that the Fed has probably done the right job, as opposed to someone playing politics with it and going up and down. And then you're right, when you do that, generally the African Americans, Hispanics, and others, and those with the least resources feels the most pain.
Yeah. All right, well, on those same lines, I want to talk about financial inclusion. That's what brought us here. It's a term that I know I hear a lot, financial inclusion, and I'm sure you hear about it all the time. What does it mean to you in policy terms when you're thinking about what we can actually do to improve access to financial services and the economy for the folks that we're talking about today?
Well, look, to me, we've always got to think out of the box. We can't just stay in a box, and we can't say that we're going to continue to do things in the way that we've done it for the last 10, 15, 20 years when everything else has changed. This technology has changed. The internet has changed. So things have been moving forward. And so we have to look and listen to new ideas and new thoughts on how we can make sure that access to dollars is more available and accessible to individuals who most need it. There are always a lot of options. If you have a lot of money, you have a lot of options. A lot of options of which way, how you're going to get that resources. But when you don't, I'm old enough to remember when the only option that an average person, especially in the black community, when they needed to get money, a lot of folks wasn't giving it to them. So where did they go? To a loan shark. And when they paid those interest rates, or if they did not pay them, then there was a price to pay. We don't want to go back there. And banks, that's why we had to do CRA, and we need to renew CRA, et cetera. Banks were not readily giving out money equitably. So you look at that. So what needs to happen to make it inclusive? Fintechs are important because it's a new way of trying to figure out how you can make money accessible to individuals and try to do it in a way that does not discriminate. We got to look at those algorithms, to make sure that they are appropriate also. So we got to make sure we're doing that. We've also got to make sure that there's rules in the games, because if not, what you find is that the ones that are taken advantage of is the least of those. You take advantage. So that's financial literacy, and being a part of that is really important.
Can I ask you, specifically along those lines, a product that we hear about sometimes that Congress has been kicking around is earned wage access, and there's a variety of approaches here, but there have been efforts by Congress to introduce some national standards here, and what we're talking about generally is workers accessing part of their paycheck early. That kind of language can make some consumer advocates nervous. In the past, when Congress has looked at this legislation, groups like the NAACP and Center Responsible Lending have criticized laws or bills that would exempt these products from truth in lending disclosures, for example. But I want to see how you're feeling about earned wage access in general and what the role you see for Congress is here.
Now, we got to look at it. Here's part of the role that was real big and really important. I was in Congress and helped create the Consumer Financial Protection Bureau so that they could look at these products and try to make sure that we're giving opportunity, but not opportunity for individuals to take advantage of poor people, which we've seen take place with payday lending, for example. So I think it's a way to be creative in thinking of how to do it so that someone has access, not having rollover loans and things of that nature that puts them permanently in debt, and in fact, in a cycle that you can never get out. So we need to look at that, but how you're making it accessible. Look, my own life's experience, and this is where I come from on that. My own life's experience is my dad. A lot of people do. My dad, was a hustler. He hustled to try to make a living, et cetera. Opened up and started a little small business taking kids to and from school. He needed access to buy these vans so that he can take them. But he, in his business, he couldn't buy brand new vans because he didn't have the funds, so he bought used ones. And when you buy used ones, they break down. And if they break down, you can't get the kid to and from school. Mm-hmm. So you need some cash immediately. And what was available to him was very limited, other than something like a payday lender. So my goal is to eliminate the payday lender, be able to show that you have these resources coming in that could be through payrolls and other documents that are not considered now, and that be available to give you that money now. And then when you get, when the parents and everyone was paying the next day, it's a salary, you then can pay that loan back. Transparency, so you know what it costs you when you're doing that. And then you're able to continue to function and live for another day and keep moving on. The problem comes in is where you can never get out of that debt because of it continuing to roll over. Mm-hmm. So we need to look at it, not just throw the baby out with the bathwater and say we're not going to examine certain new and innovative products that gives one access to capital. Let's make sure that we're doing that. Let's make sure that the options are up there, but also let's make sure that someone is looking at it because we don't want bad apples. And oftentimes that becomes the question too. You got one side that wants to do the right thing, somebody else wants to do the wrong thing, and generally laws are made not because of the person that's doing the right thing, but because of the person that's doing the wrong thing. And so we've got to figure that out and not meet him. And I think that's the role that government has to try to play to find that balance, and not just saying we're closing the door because one person got hurt by a bad person, so all the good people, they're going to get hurt too, and we don't give them access to what they need.
Along those same lines, you mentioned the Consumer Financial Protection Bureau in that last answer. So I want to ask you about another thing they're working on, which is open banking. That's a big push for the CFPB. You've written some letters to the agency about open banking and what it can mean. Specifically, I wanted to see if you would talk a little bit about payroll data and how that could inform, how financiers think about a borrower's lendworthiness.
Yeah. Look, I like what I'm seeing so far, I'll tell you that. Because you can get a lot additional information, and when someone is judging one's creditworthiness, other than the way you get your FICO score, because we've seen the FICO score has hurt many African-American communities in particular. And so to get more information to determine your creditworthiness, the more that we can do that to make sure that then puts more people in the game so that they get credit or access to capital as they need it. So it is something that I think that and that's why I wrote the letters, because I think it's something that could be very creative and help individuals who now, they're good and credit worthy, but the person that's making the decision does not have enough information about it other than the standard ways in which they do it. And we've seen that doesn't necessarily work or show one's creditworthiness.
Cool. Looking ahead to the next Congress, there's nothing that the top Democrat on the House Financial Services Committee, which you also serve on, but top Democrat, Maxine Waters, housing. You have a lot of good relationships across the aisle. And we have a pretty good sense of, I think, of what one party wants to do here. And last night, we actually reported Tim Scott's housing plan from the Senate banking side on the Republicans. Do you see room for bipartisan housing reform in the next Congress, especially if, say, the chambers flip control? Is there something there, or are the parties just too far apart at this point?
I definitely see. I always believe the glass is half full, not half empty. I think the problem that we have is some folks don't want anything to happen. But I think that there is room there. Housing is not an issue just for African Americans. Housing is an issue for America. And that's whether you come from rural America or urban America, whether you are from the East Coast, West Coast, or in the Midwest. It's an American issue. And so therefore, we should be able to sit down and talk and look at some of the specificities that, you take the type of housing, say, for New York City may be different than the type of housing that they would need in Missouri. So you take those things into consideration and you make that compromise. And you have Democrats and Republicans in those similar situations. So then we are looking at now it as an American issue, housing. How can we make sure that people can continue to live and move forward, to have and share in the American dream? And that takes some compromise. That's the genius of this. And do I think that there's room to do that? Absolutely.
Yeah. Okay. I want to talk a little bit about innovation and fintech partnerships, which is, again, like a huge area in financial services right now. There's a lot of scrutiny here about, really since the bankruptcy of the middleware company Synapse, and there's been kind of some regulatory hot potato happening about the consumer harm that we've seen results from this. There's millions of dollars of consumer funds that have been kind of locked up as this bankruptcy limps its way through the courts. Do you see a role for Congress in clarifying who is ultimately responsible in a situation like this, especially when so much of the financial services system depends on fintech partnerships?
Yeah, well, look, I think is there a role? Yes. And I think that there's a special role. And I think that we need to look at it in a very close manner. I think that, again, we've got to take into consideration the differences between states and make sure that that dialogue and conversation is taking place also. So whether or not there's a federal standard as opposed to a state standard comes into play. And we've got to look at that. So I generally take the philosophy a lot of times when I look at what's taking place when we do get involved. I think the federal government can always try to set a floor.
Sure.
And leave the states to decide whether that floor is appropriate for their state or they need further protection because of what's going on into that state, and having the states involved also. And that way you have a dual situation. So I think we do have to protect everyone, the federal government, with something that is a floor, and then we build upon that. If the state thinks it's something that's important for the state, to give them the flexibility to do just that.
Great. Congressman Meeks, we are unfortunately out of time. Thank you for joining me on stage here, and thank you all for joining us here at the CBCF. I'm going to bring back Anna Palmer on stage to have our next conversation. Thanks so much.
Thank you. Thank you.
All right, thank you, Brendan and Congressman Meeks. Really appreciate that informative conversation. I'm going to welcome Adam Krinkle, General Counsel at Chime, to the stage for our fireside chat. Welcome.
Thank you.
All right, so we're going to start off. We heard a little bit from Jeff kind of about what Chime is, what's happening in the fintech world right now. You serve as General Counsel. Tell us a little bit about your role at the company.
So my role is really to help the company implement strategies and implement processes that are in a compliant manner, and to help expand access to all Americans to the banking system. And it's something I'm really proud of, and I just also want to say it's great to be back on the East Coast. It's heartening to see people actually holding paper, which you don't really see in the Bay Area too much. Everybody's on the phone.
I'm old school, you know?
Yes,
I do the best I can. I gotta make sure it's big enough so I can read it these days.
I'm a stranger in a strange land. I also have paper. Yes.
We'll talk about, you've been there a little bit over a year. What drew you to fintech, and kind of in particular to Chime, and wanting to be part of what the company's doing?
So I spent most of my career in financial services, but mainly both in investment banking and also hedge funds, which the younger people in my department have told me they derisively call TradFi, which I didn't know that was a term. But I found it interesting because I was working with really smart people trying to solve different types of problems. But one of the things I noticed when I had an opportunity to consider other options was the traditional banking system is great for certain types of people, and it is not necessarily well suited for other types. And one of the things that I loved about Chime was a combination of them focusing on everyday Americans, bring financial inclusion, and personally for what I do, the fact that respect the rules is a core value of Chime was especially attractive to me because a lot of what I do is help maintain the culture of compliance.
We heard from Mr. Meeks saying, if you're on one end of the wealthy spectrum, there's all these kinds of options, right? But for everyday Americans, oftentimes, that isn't the case when it comes to traditional banking and providing services. What excites you most about working at Chime?
Just the ability to listen to our customers and try and develop products and services that meet their needs. I mean, I don't think it's an accident that because Chime, and admittedly there are other companies that approach these types of problems as well, but Chime is undoubtedly the leader. We've been able to offer banking services to, like I said, everyday Americans in a way that avoids a lot of the pitfalls and challenges that they're facing from larger financial institutions, right? People have talked about free checking and easy access to banking, and yet there's always, until a company like Chime had been around, tremendous costs in terms of overdraft fees, in terms of minimum account balances, and because of Chime, billions of dollars in, I think President Biden called them junk fees, has been taken out of the system. And I think, Congressman Meeks, highlighted the importance of bringing access to lots of Americans. And I think it's not a binary, people are excluded or they're included. I think it's much more of a continuum. And there are lots of, like I said, lots of Americans who have some access to the network, but they're being charged at almost an incremental toll and penalty because they don't meet the minimum account balance, because most traditional banks, they make money by trying to get as many deposits as possible and then use that for lending. But Chime, I think Jeff highlighted, we don't make money off the backs of our customers. We make money with our customers.
So we are less than 60 days out from the election. All eyes are on Washington and the presidential race. Obviously, this week we had a massive debate. In doing a little research about you, I saw that you attended Stanford Law School with Kamala Harris's brother-in-law, Tony West, chief legal officer at Uber, who is on leave helping the campaign. Do you know him well?
Yes, I know Tony well. Tony, was big man on campus even back then. And, there are some people that you can, even at an early age, you can see them and know that they're destined for greatness. And I think not only was he exceptional, but he was always able to bring people together and bring people on his team. I think probably his most successful move was his wife Maya Harris. And I just don't bet against Tony. It's a bad bet.
All right, you heard it here first. I want to shift the conversation to policy. We're obviously here in Washington. There's a lot happening with regard to the economy right now. Next week, we have the Fed Reserve Board thinking a lot of anticipation that they could be cutting interest rates at its September meeting. It looks like inflation is slowing, but we hear all the time that it's still hard for people to pay their bills, to go to the grocery store. The cost of goods is more expensive. What are you hearing from Chime members?
Yeah, so I will defer the rate cut. I used to have a boss when I worked at a hedge fund who said that if he could predict the future, we'd be having this conversation on his 400-foot yacht. So I take that point. Part of the reason I went to Chime. But and look, I think you're absolutely right. Like you do see an uptick in discretionary spending, but that being said, for a lot of Americans, people are living paycheck to paycheck, right? And access to the financial system, liquidity is a critical thing, right? There are lots of people where, Congressman Meeks talked about a car breaking down, right? There's lots of people where if a car breaks down, your life can all of a sudden start to spiral. You'll lose your job, you'll lose your housing, right? So making sure that those types of knock-on effects don't happen is something that we hear a lot from our members, which is why we developed MyPay, which is our early wage access product.
Yeah, so let's dig into that a little bit. Earned wage access was something that Mr. Meeks and Brendan were talking about. The MyPay product, it's a credit product, but it also is in that category of EWA. Can you explain that dynamic and how Chime sees MyPay fitting into that ecosystem?
So look, there are some providers, especially providers that are going through the employer channel, who take the view that it is not a credit product. Before we made our decision, there are lots of debates and there's intellectual pros and cons. We actually felt that we could design a product that was attractive to consumers and yet met all of the disclosure requirements, the TILA, Truth in Lending Act requirements associated with a credit product. So we were able to launch that. We don't fear thoughtful regulation. We don't fear ways to protect the consumer. So, that was sort of an important decision for us.
Mm-hmm. There have been some headlines recently about bank and fintech partnerships. We heard Mr. Meeks kind of talking about that a little bit, about how he sees regulation and the role for Congress. But there's been especially some focus after the bankruptcy of that company, Synapse, where a reported 100,000 Americans were locked out of nearly $265 million in deposits. How is Chime reacting to the chatter around that partnership model?
Look, we're sensitive to that, obviously, and I'd love to take credit for it, but honestly, it's the people who were there before me who set up our bank program, and extremely careful and thoughtful in setting it up in a way to distinguish us from companies like Synapse. So we make sure that our customers have direct relationships with their banks, right? Their money is in FDIC insured accounts. There is no middleware company. There is no, it's one of these things, it's not a black box to the consumer, which we think is critically important, and also, unfortunately, shows itself when there's a problem, because what we're learning as this soap opera continues is that there was insufficient reconciliation, right? And so for a lot of products, for people to get the benefits of FDIC pass-through insurance, you've got to have really tight records. You've got to have clear reconciliation. And that wasn't the case with the Synapse model, and it's always going to be harder to do in one of these multifaceted, tetrahedron type structures. So I think our structure is designed for daily reconciliation to intentionally to avoid that type of problem.
Another big issue that a lot of the folks here are probably working on, following very closely, is interchange. I think it's been an issue that has seriously been going on since I started reporting 20 years ago in Washington, D.C. But I want to talk about that. The Credit Card Competition Act and the debate over interchange specifically is another just big topic. While Chime wouldn't be directly impacted, is my understanding, because the legislation, since you're not a bank with more than $100 billion of assets, but obviously you're following it. How are you thinking about the debate over interchange?
I think the fact that that the economy has grown significantly, that fraud has gone down significantly, is undeniably linked to interchange, right? Interchange is the mechanism that allows for increased access through companies like Chime, reduced fraud, and better competition. So I'm not sure how the debate's going to continue, but from our perspective, interchange is something that helps our members, and it's something we think is important.
So we are almost out of time, but I want to finish here with a question I often ask in these kinds of conversations. You have, obviously you're not here all the time, but you have kind of advocates, you've got staffers, lawmakers, there's a bunch of people on the live stream that are watching this today. What's the one message that you have for them that you want them to take away from this conversation?
So I would say that we feel that we are a force for good, that we are trying to improve the lives of everyday Americans, that we would love to partner with regulators to develop thoughtful regulations, because not all fintechs are created equal. Not all fintechs have respect the rules as their core value.
All right, we're going to leave it there. Adam, thank you so much for joining me on stage this morning, and thanks for Chime for partnering with us to make this conversation and some of our conversations later today possible. We are going to be breaking for lunch, but we will be back in just a bit with our next conversation. Thank you so much.